All right, good morning. This call is going to be about Forex Trading 101. And the purpose of this call is to really to give anyone who's new to trading within our teams a jump start. So you get to understand every single thing that you need to know before you ever hit a buy or sell button. Also is to reinforce the concepts to all existing traders on what you might be doing wrong and or to reinforce what you might be doing right already. Okay, so as I said, we have an agenda for this afternoon. Well, by me this morning, we have an agenda, and this is the agenda right here. All right, 10 key points we're going to talk about, and it goes from risk management, charting, fundamentals, education, London Daybreak, spreads, correlated pairs, macroeconomics, indicators, and avoiding greed, which is the last point, okay? So without any further ado, let's get started. All right, so we're gonna start with risk management, all right? Now, I just did a video about, I don't know, 3 to 4 days ago on risk management 101. If I pull up the groups, let's go to somewhere. That was one video. I did another one, which is posted on it is posted on the Team Freedom. Okay, here it is. It is posted on the Team Freedom YouTube channel for anyone who wants. All right. Everything that I'm going to talk about, I have a Word document here that I'm going to send out, right? Which has all the links, everything you need, minus the Excel sheets. Okay. I'm going to just keep putting in brackets Excel, which means you need to get that Excel sheet. All right. Now, this video, which is on the YouTube channel, right, teaches you how to use the Team Freedom investment formula sheet, okay? I'm not going to go in depth with it because I already did a thorough video and the video is available for you to watch. But basically, this is what I want to say. No one should be placing any trades without coming into this sheet, okay, and figuring out what is the appropriate lot size according to your balance and according to how much growth you want to make for that day in terms of percentage. No one. Okay? Now, you need to understand this simple concept of risk management, right? No one should be risking more than 3% per trade, no matter how good the trade looks. Okay? Also, every time you place a trade within the same pair, right, within the same direction, either buy or sell, you essentially doubling your risk every single time. Okay, so if you had one trade in, let's say for GBPJPY, right, or GBPUSD. I have a chart here open, right? GBPUSD. Let's say you had a trade in to sell somewhere here at a 0.01 lot size. Well, the minute you twin trade it, or you triple trade it, or quadruple trade it, you essentially times in your risk by either 2, 3, or 4 times, right? So keep that in mind, because if the trade goes bad, you're not going to lose 3%. You're going to lose either 6%, 9%, 12%, 15%, etc. All right. So risk management is super important, guys. Right. This is why when a trade, when there's drawdown or a pullback on a pair, you could essentially last. Right. You will not blow your account, or you don't have to be as worried about blowing your account if you practice correct risk management. All right. Now, another thing which I showed on the video also, I'm going to show you real quick. On the risk management, I taught you all how to use the position size calculator. All right. Position size calculator, it gives you what your lot size needs to be and gives you extra confirmation based upon this lot size presented in the Team Freedom Investment Formula Excel. All right, so please pay attention to this YouTube video link that I'm about to give out. all right? And it teaches you how to use this position size calculator in combination with the Team Freedom investment formula sheet, okay? And just, it's simple math, guys. I know we have a habit, and it is good, right? There's nothing wrong with it. It is good to sometimes twin, triple, quadruple trade, but you have to know when to do it and when not, okay? No one should be doing that unless you are 2,000% sure that the trade is going to go in a direction in which you want, okay? So that's it for basically risk management. I just want to let you all know that you could be the best trader in the world, fundamentally or technically, but if you don't practice risk management, it doesn't matter, right? You're eventually gonna hurt yourself long term. All right. Now charting is the next thing. What this means is basically having your levels drawn up, right? And what I mean by levels, if I go to one of my charts, all right, if I go out to the month view, because that's where I always start, at the month, right? You see all these lines? I have all my lines drawn from the month. Oh, that is wrong. Okay, let's go to a different chart. This was to be weekly. Let's go to GBPJPY, and I'm doing everything based upon TradingView. That's the platform which I use. Soon enough, I'm gonna be going to MetaTrader 4 on my laptop, mainly for placing trades, but not for not for my charts and stuff like that. Okay. So let's go to GBPJPY, which is the dragon, which they call it in trading. All right, it's a very volatile pair. I believe that no one that's new should be trying to perfect pound pairs in the beginning. Different types of. Okay, yes. No one should be trying to perfect pound pairs in the beginning. The only reason you should be trading pound pairs right now is strictly for London Daybreaks. Okay, but other than that, no one should be trying to perfect pound pairs. Right? Pound pairs are very strong, fast-moving, volatile pairs that it takes a lot of practice and experience to really understand them. All right, but from the charting point of view, this is what I want to show you all. Okay, everyone should be doing what we call top-down analysis. All right, and what we mean by top-down analysis, you go to the highest time frame possible, which is the monthly, right here. You'll see that, right? 1 month. If you don't know what this is TradingView. As I said, I have TradingView right here for y'all, and I'll give it to y'all right after, right? TradingView. What you want to do, every pair you see has what we call a range, all right? When I mean a range, it basically means that there's a specific gap, a fixed pip gap in which price always tends to respect, right? For the pound JPY, we have found this gap to be, what's that? 175 pips. 175. Yep. No, wait. What is that? Well, 175 in terms of numbers, if you look at it right here, right? And I'm counting from this decimal place back here. Or you could just say 15. All right. So how I chart, and this is what I've been taught by some of the IML educators like Lex Wave, right? I use him for his technical analysis. How I was taught was you want to do basically this. He gives you the ranges, right? So this range is, if you do the minus between these two numbers, is 15. Now, let me zoom in a little more. Not like that. Let me zoom in a little more. There we go. I'm gonna address all questions right after this. Okay. All right. So this is what you want to do. From the monthly, right? After you have figured out what your range is for the pair, right? This is what you want to do. You want to take your Fibonacci. If you don't know how to use Fibonacci, all right, what I'm going to do is everything is in your back office, guys. Every single thing is right there in your back office, all right? Under trading, oh, no, where is it? Under trading, IML Academy, okay? Everything is right there in your back office. Okay, so for the Fibonacci, what I want to show y'all, you go, you grab your fib, okay? I have my fib all styled nicely and whatnot, and you just run your fib between the range. Oh, come on. Okay, from 100 to 0. All right, you come in here, and you can make the coordinates more specific. So I know what it is. It's 180 and 165, all right? Boom. So they line up nicely on my lines. Now, the next thing you want to do to find the weekly resistance, okay? The weekly resistance is always going to be at the 50% fib level, right? It's always going to be at the 50% fib level. Okay, what we tend to do, and what we were taught to do, is to use even numbers for all your levels. Okay, so if this was 179.25, just round it up. Okay, just round it up to 180 or round it down to 179. Right? The idea is to keep everything nicely and intact. Now, one of the ways to know what these levels are straight off the chart, right, is you have to know what your candle patterns are. Right, everyone should have the JCP, Japanese Candle Patterns app downloaded on their phone, right? And basically, we look for areas of major resistance. So right around here, see these major resistance areas? We don't even need to go look in the past. We just stick right where we are, because this is where we're concerned about in the present, right? All these major resistance areas is where you want to put your monthly levels on. Right? And indications of this is just where you see wicks go through. See right there, right here, resistance, 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 right? That's all you need to look for, okay? So let me see if I can find a clear example. Oops. Okay. Let's see. All right, right here. You see all these wicks, guys? Let me show you patterns. I'm gonna clean up all this below here. 1 second. It's kind of confusing me. Set charts. Let me make sure everyone is muted. Okay. Let me delete this Fibonacci right here. Delete that. Delete this little arrow. Okay, now let's go back up onto the monthly. All right, less chaos. All right. Look at this, guys. You'll see doji. You'll see all these long wicks. You'll see, I'm gonna look for candle setups. Perfect example. Here's a doji. See how that touched the monthly at 120 perfectly? All right. You're looking for shooting stars, doji, twin tweezer tops, twin what do you call it? Twin bar or whatever they call it, right? Essentially where you have pin bar, sorry, not twin bar, pin bar, right? Or you're looking for shooting stars, anything like that. That's how you find out what your monthly and your weeklies are, right? So for me, and from what I've looked at Lex Waves on IML TV, these are the points he used. I only focus on one area, right? Let's say between 180 and 165. I draw my weekly between there. And then I just do simple math. I just keep going down 15, 15, 15 all the way down, running my 50% fibs all the way down. And that's how I find out what my my monthlies and my weeklies are, okay? Second thing you want to do is you want to come down to the week chart, all right? Come down to the week chart. Anything lower in terms of time frames just gives you a more granular view of what you're looking at, okay? So you can see perfectly where these weekly resistances are. It's lining up perfectly, all right? I didn't come here and look to see where to draw this line. I just did a simple 50% fib, which looks like it's a little off right now. How do I know? The spacing isn't the same. All right, so this says 127,500. I guarantee you this is wrong. See, should be 127,500. Boom. All right, cool. All right, then you keep coming down. After you draw your weekly, you come down to your daily. All right, always reset your page so you can see exactly what you're looking at. Now, here we go. Guys, the questions. Okay, yeah. Chin Pips handle all the questions for me. All right. So guys, look, I came down to the daily chart, right? Now, what you need to understand, the monthly resistance is not a very specific line. It's more like a reversal zone. It's a zone. That's why I put this gap here. Okay. Now, when I came down to the daily chart, now I have to draw my daily levels, right? All I looked for was areas where price respected. That's it, right? I saw this price respected there, here. Okay, 3 touches is good enough for me. Boom. I drew my daily resistance, all right? And what I did, look how I keep it at even numbers, right? You want to keep it at even round numbers, all right? It doesn't matter if you round it to the highest tenth or the lowest tenth. It doesn't matter. Just keep it even, okay? So I found one resistance there, came down. I'm not sure if I have any more dailies right here because, see, the whole idea is you don't want to clutter your charts, right? You don't want a bunch of lines. You just want, all your concern is where price is at or where price could potentially go, all right? So one layer up, one layer low, okay? Then you come down to your 4-hour chart. Notice I'm doing top-down analysis, highest to lowest time frames, all right? On the 4-hour chart, now I draw some 4-hour resistance lines, right? These lines were drawn before price did this. See how price perfectly respected right here? Perfectly, right? Because I did it based on the past, not where price was at, okay? I did one up here. So now I have a range, right? For me, I believe price is going to go down lower because of the EMA is pushing price down. All right, even though it is in an uptrend, here's the trend line. Price has to come check this at some point. It just has to. It already broke the monthly, and it respected the monthly. So either it could do one or two things. It will come back up. It's in the monthly reversal zone. So anywhere around here that it respects is good for me. And then what I'm looking for it to do is come down, check the daily, maybe do a little bounce, and then come down, check the trend line, or even potentially down to the weekly. All right. So we keep going lower time frames, 2 hours. Okay. And you can draw 2-hour lines, 1-hour lines, etc. But no one should be going under hour. And I'll tell you why. All right. No one should be going under hour because anything under hour is a video game. It is. You see, trading is very emotional. Right? The more you go granular into a chart, the more it tends to play with your emotions. All right. So look at this. Y'all see how long this red is right here, or these reds? Look what's going to happen if I go down to 15 minutes. I'll reset that. Look at all that. See all this? All that would have made someone come out right here instead of taking the ride down. Imagine you were looking at the 4 hours alone, or the 2 hours. You would have just seen some long red, right? You would have been more confident than if you looked in the lower time frames. All right, guys. So essentially, that's how you do charting. You just look for where price resisted in terms of their wicks. You don't have to go in the past. We don't care about the past. Stay in the present, because price, whatever it does in the present, it did in the past. Whatever it did in the past, it's going to do in the present. All right. You just look for where price has wicked through consistently and respected, and you just draw a line. Right. Come right here, and you draw a horizontal line. Okay. So essentially, that is how we do charting, right? Tune into Lex Waves if you want to learn more on charting, okay? The zone varies per pair, right? It just varies per pair. It could be as much as 1,000 pips. It could be as short as 200 pips. But the only way you're going to know how wide the zone is based on candle patterns and how much it resists. And once you find one zone, it's going to be the same for everything in that chart for that specific pair. All right, now to point number 3, fundamentals, economic calendar. I did a video on Thursday for y'all about going to your economic calendar. See, no one should be trading unless you go to your economic calendar first. No one. Or to your Forex factory. Because this is like a blueprint of what is going to happen for the day. All right? I have these links for y'all available too. But this is basically a blueprint of what is going to happen for the day. Right? It's telling you where all the traps in the market are, or all the opportunities, however you want to look at it. Okay, so on Friday, non-farm payroll, if you were just trading, right, and you never looked at the calendar and 7:30 came around and your charts just went crazy, it's because of this, right? You need to be looking at what's going to happen before you ever push a button for buy or sell, okay? So economic calendar just tells you all the events are going to happen every single day, because news happens every single day, guys. Right? When you turn on the TV at I don't know what it is. I can't remember. I think it's 7 or 8 o'clock at night. There's the news channel, right? I mean, as long as there's news, there's going to be money to be made. And let's face it, news is not going to stop in our lifetime. Okay, which means opportunity to make money is never going to stop in our lifetime. All right. So it's either you're going to be watching news or learning how to capitalize on news like we do in the Forex market. Okay? Very simple. And I'm going to give you all that right here on the fundamentals. I have the 2 links. And I'm going to put the YouTube video link to what I did on Thursday for you all, okay, after. All right. Next key point. Remember, guys, this is what I'm doing for y'all right here is a high overview of everything, all right? I can't go into all these points in granular. Okay? Okay, education, number 4. I'm gonna give it back. L. All right. Oh, sorry. All right. Sorry, I lost my train of thought. Point number 4 is, what was it? Education. Okay, cool. Education. This is all the education you need for now. All right. Now, IML Academy. Guys, if you are new, meaning you just started within the past month to 2 months, yes, you are new. You should be running through all of these modules. No one should ever push a button to buy or sell before you finish up to this module, technical analysis. Because at this point, you have no idea what is happening, okay? I get a lot of questions when people sign up, ask me, when do I know when to buy? When do I know to sell? How do I calculate pips? How do I manage my risks? What is leverage? All these questions are right here. So I just tell them, go to the IML Academy, because I'm not going to dispense my time that I could be using on analyzing charts to help them make money, explaining basic concepts, which is already there, stuff that they paid for, all right? So basics 1, 2, 3, 4 and technical analysis is the foundation of all trading, okay? Foundation of all trading. So everyone needs to be here understanding concepts so they could talk and listen and understand in terms of Forex or trading terms, period, okay? See, these concepts go way beyond Forex, all right? Because we are not Forex traders. We specialize in Forex, but once you understand all these concepts, you are just a trader. You could trade anything from CFDs, cryptocurrencies, stocks, whatever you want, because it's all the same. The charts are all the same, guys. If you don't believe me, look at this. If I go out here, right, and I say, I don't know, stocks, right, Apple, and we look at the Apple chart. Tell me how much difference does this look to the regular charts other than there's a bunch of gaps? It's basically the same. It's the same. You're just reading candle patterns and trends, all right? So you are not a Forex trader. You specialize in Forex, but a lot of the millionaires, like Chris Terry, right, they started off in stocks and then they specialized in Forex later on. This is why we could eventually move over to the cryptocurrency market and capitalize there also. Not move over, but we could capitalize on that market also, okay? So everyone in here needs to be understanding all these concepts, right? Then going over to more intermediate concepts, right? Like pairs and Fibonacci and pivot levels, Elliott waves, Bollinger Bands, etc., etc. Okay, guys. So education is very important. Now, once you get past all your concepts, right? These foundation concepts right here. Oh, guys, don't get confused between fundamentals and basics. In terms of Forex, fundamentals does not mean basics. Okay? I mean, fundamentals does not mean, it does not mean basics. Fundamentals means news. Okay, guys? Know this. Fundamentals means news. All right? It does not mean foundation or basics. It means news. All right? So you'll hear me saying either fundamentals or technical analysis, which means either charting levels or macroeconomics. All right? So once you understand all of this, everyone needs to be tuning into IML TV. See, IML TV for me is the most powerful tool that IML provided, and I'll tell you why. You see, indicators and all that stuff is nice. The harmonic scanner is nice, etc. But let's say this. Let's say from Monday, IML said, you know what, guys? We're just gonna do with everything minus IML Academy and IML TV. Well, all the harmonic scanner driven people, they're screwed. All the web analyzer people, they're screwed. Fusion trader people, they're screwed. Everyone else is basically out of luck. Only the people who understand price action and can trade based upon price action will be able to sustain their growth and their success, all right? So I believe price action is king, and this is why I believe the IML TV is king, okay? Because these traders, and I'm gonna keep referencing Lex Waves because this is the #1 guy I listen to, right? And Jean-Marc, anyone who goes based upon strictly price action, right? Or use some form of tooling to help them acquire pips, they are the ones that you really want to tune into to understand price action and price index and this kind of stuff. All right, so let me put it this way. When every day is going to happen, right? 24 hours. If one day passes and you have not watched one IML session, you're doing Forex completely wrong. Your learning is wrong, straight up wrong. All right, you have 24 hours in a day to either watch a live session or watch a recording. If you do not do this, then you are not 100% committed. I don't care what's happening in your life. All right, it takes 1 hour out of 24 hours. Give up an hour of sleep, give up an hour of Netflix, give up an hour of whatever else you already committed to make this happen. Because let's put it this way, time is going to pass, and one or two things is going to happen. Either their bank account is going to get bigger, or it's going to stay the same, or it's going to get slimmer. Okay, so IML Academy is very important for your education. All right, guys. All right. Before I move on to the next point, can you look? I hope he puts to analyze mishap of it. Yes, everything will be on YouTube, guys. Okay. All right. Next, London session Daybreak. All right. Now, London session Daybreak, guys. Everyone, when you set up your trading view, right? Your trading view should look like this. You should have a bunch of what we call watch lists, right? And every watch list should be categorized into specific pairs, right? However you want to do it. I do it by the prefix currency of that pair, or you could just do it by the suffix currency of that pair, okay? And what I mean is I put all my pound pairs together. Everything that's prefixed with pound, I put it together. Everything that's prefixed with, I don't know, euro, I put them together. Even though a euro GBP, you know, when pound news happen, it affects this pair. But I still leave it with all the euro prefixed pairs, okay? So when London session happens, you should have a little watch list with all 6 pound pairs lined up, all right? So you could just click between them really quickly, see what's going on the charts really quickly. All your analysis is there really quickly, right? My internet's messing up. Maybe I'm going too quick for it. But I wanted to get into the London session Daybreak, right? Now, we have a strategy which was shared to us by Dr. P and her friend out there and on the West Coast, okay? If you have no idea what the London session Daybreak is, I'm not going to tell you in terms of how to do it, but what I'm going to say is it is the most consistent way we've been making money every morning, okay? So before you trade for the day, whatever times you trade, there's an opportunity, a window between 1 hour after the London session has opened until about, let's say about 5 hours after that to make a consistent 10% return ROI on your balance, okay? And if you don't know where this video is to learn about it, I'm gonna give it to you all right here. Is it, oh, this is not it. Let me go. I'm gonna give it to you all. It's right on YouTube, right? It's called London Daybreak, right? And I mean, this is an existing, you know, a lot of success behind this, and a lot of people use this strategy on a daily outside of our group also to make great money, right? So what I'm gonna do, I'm not gonna play this for you. I'm just gonna copy the link. Okay. And I'm gonna add it to the links that I have to send you. All right, so it's gonna be right here. It's gonna add a home. I like to keep all my work neat. Okay, and I'm gonna give this to y'all after. Now we do have an Excel sheet that we use in conjunction to this, all right? If you don't have that Excel sheet, it's gonna be given, all right? And basically this is what the Excel sheet looks like, all right? If you have no idea what London Daybreak, I'm gonna give you a 5-minute rundown or less. Basically, this is what happens. Every day on the charts, let me see, where's my charts? Okay, let's go back to my pound JPY, all right? You always want to be on the hour time, on the hour chart, right? On your phone, because your phone is specific to your broker, not TradingView. Okay, TradingView, the charts are supplied by different brokers. Like right now, this one is supplied by FXCM, okay? Or there's charts for Oanda, et cetera, right? If I type GBP, you see GBP for different brokers, Oanda, Forex.com, blah, 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 come up, right? I just use this for my analysis, not to do my not to find my entry points off of, but you want to be on an hour chart. And what happens every single day, right? the London session opens. For me, it's at 2 a.m. once daylight saving comes tomorrow, okay? When it opens, this is what happens. Because all the banks and financial institutions were closed overnight, the employees went home, right? When they come in the next day, transactions have to be processed from the business day before. See, when they have to be processed, the market moves, okay? When the market moves, it gives us the first hour. After it moves the first hour, it gives us a good indication of where the market is going to go for the day or for a set period of time, okay? So what this zone is called for us, right? An hour after the market is open, is called the kill zone, aka the London Daybreak strategy. Okay, guys? Happens around 2 times a day, right? Now, what happens is as soon as the hour has passed, what we do, right? And you can do this on your phone. You see this OHLC acronym right here. You can put this on your MetaTrader also. It stands for open, high, low, close. What this means, if we look at this candle right here, okay? I think they're sticking. But if I put my cross on here, you see these numbers tell me what is the open of the candle, which means where the body of the top of the candle is, the high, which tells me where the top wick is right there, right? Come back on it. The low, which tells me the bottom of the body of the candle, and the close, which tells me the furthest that the wick went down here. All right. So I'm gonna change this to arrow so you can see better. High, open, close, low. All right. All we care about is these two, the high and the low, which means the top of the wick, the bottom of the wick. You go on your charts, right? Figure out whenever London session opens for you, okay? An hour after, you want to look at the hour candle, right? As soon as the hour candle closes and the next candle opens, right, or is beginning to form, you get the high and the low. You come over to this lovely Excel sheet provided for us. You put in the candle high, the candle low, right? Let's say this was a 7 instead. Hit enter, boom, everything changes. Hit enter, boom, everything changes for you. Now notice this, we only go for 15 to 20 pips. That is guaranteed every single morning, okay? Either on the buy, the sell, or even both, right? Some days you could get both, some days it's either one, right? If you want to push your luck, I would even go as much as 25 pips. But, okay, some days the market will move 100 pips, okay? But you have to be paying attention to the charts. I'm just here to show y'all that, you know, if your day is so busy that you have no time to do nothing else but, you know, but look at, I don't know, just London session, there's a lot of opportunities to make a lot of money during this session, okay, guys? Two messages. Yes, London session is consistent money in your bank every single day, all right? So if you have no idea how to do this session, as I said, here's the link I'm going to give to y'all, all right there. And then I'm going to provide the Excel sheet. And there's multiple videos on Team Freedom YouTube channel. So also go ahead and look to see how to do it, all right? Okay, so that's done. Next, let's go to the next point. All right, moving fast and steady. All right, spreads. This is so important, so important. All right, spreads. What is a spread? A lot of people don't even know how their brokers make money. Well, how your brokers make money, the number one way is via something called a spread, okay? Now, I use LMFX. That is the broker I recommend, and that's the broker I've been using. Nothing is wrong with FX Choice and you know, other big brokers like Oranda and LCG, et cetera, et cetera. But here in the States, right, we tend to use LMFX a lot more for specific reasons, like you see, I won't go into specific reasons, but why I tend to use it, guys, is because of the expenses, right? In terms of depositing and withdrawing money. They don't charge you for depositing and withdrawing, and that's why I like it, all right? So if I want to pull out 1,000, I'm gonna pull out 1,000 and I'm paying no one, no percentage of that, all right? No transaction fees. So spreads are essentially how much you have to pay your broker to get into a trade, all right? Because remember, brokers are nothing more than transaction facilitators, all right? To facilitate us to get into a transaction. And that process is not free, okay? So for all the pairs, right, they have 3 different accounts, premium, fixed, and zero. Every account has different spreads for the accounts, okay? I use a premium account, so I'm gonna just stay in this column right here. But let's look at pound pairs, right? Because let's say everything we're doing right now is based upon London Daybreak strategy, right? So the pounds, as you can see right here, the spreads go from as low as 2.1 to as high as 7, right? Now what this means is before you could get into the trade, all right, you have to pay the broker this amount of pips. And the way you pay it is by entering the trade this amount of pips away from your entry price. All right, so if your entry price was, let's say your entry price was here, right? 150.00, which is a terrible idea because this is a resistance line. But let's just say hypothetically, right? You wanted to enter the trade right there. Well, your broker will enter you, all right? Let me do this. Put broker entry, all right? Your broker will enter you. Let's say this was GBPJPY. Let's go find the spread. 3.5 pips, okay? Your broker will enter you at this number, right? He will not enter you at 150 flat. He will enter you 3.5 pips away from the sell, okay? If you were selling. So if we kind of zoom in, you have to pay him, right? You have to pay him this gap right here. Now here's where it gets interesting. If you were trading a micro lot, right? We're going to do everything in terms of one, either one micro, one mini, one standard, okay? If you were trading him for one micro, okay, which is essentially 0.01 lot size, right? Well, then you're going to be paying your broker 3.5. You're going to be paying 35 cents, okay? 35 cents. Right? If you were using a mini lot, okay, 0.1, 0.1. Oh, everyone mute their mics, please. All right, muted everybody. If you were trading a mini lot, okay, let's use. Well, then you're going to be paying your broker $3.50 before you get into the trade. Okay, this is very important to understand because you're always going to start negative when you go into a trade. All right, guys, you're always going to start negative. That is just a given. All right. If you trade in a standard lot, okay. Wait, why can I still hear people? Who's talking? All right. If you're trading a standard lot, well, you're going to pay the broker $35. All right, guys? So this is what you'll need to understand before you get into a trade. All right? This is what you'll need to understand before you get into a trade. All right? This is very important because the minute you go red, it's going to look scary to you. All right, and if you're not using the correct lot size, well, your risk management is completely off. All right, 1 second. Someone's mic is still on. Oh, am I hearing myself? All right, guys. So everyone needs to pay attention to what their spread is for their pair. Hold on 1 second, guys. Let me figure out who's talking. Showing all is muted. Someone overriding my system? All right, cool. All right, so this is for this specific reason. This is why I don't trade any suffixed NZD pairs. All right, the spreads are ridiculously high for the New Zealand dollar. Ben, could you please mute your mic? All right. For this specific reason, I don't trade suffixed NZD pairs, because if you go look at them, you would see 4.5. All right. You would see 7.1. Look at this ridiculous spread. I don't know what pair this is. 80 pips. All right. You put a standard on that. That's $800 negative. You are immediately. Okay. GBP NZD 7 pips, etc. You could see NZD suffix pairs. They're very volatile and very expensive to trade. All right. So I don't know what broker you all use, but you should be able to go to a page where they have all their spreads laid out, so you know what spread to use. I mean, which pairs to trade based upon spreads, right? That's how I go. The cheapest pair to trade that everyone should know is the Euro USD. It is by far the cheapest pair to trade. This is why I take the most risk on that pair, because if you look at it, where is it? Euro USD. If you have a zero account, it's almost 0 pips to trade, right? Which means I could get in almost exactly on my entry price. All right, guys? So spreads are very important. That's how brokers make their money up front. Beyond that, they could add stuff like commissions, and they could do rollover fees, which means if you hold a pair overnight, well, you have to pay them to hold that transaction overnight. So you have to pay them a rollover fee also, okay? So pairs are very, spreads are very important. Make sure you're all aware of that. All right, let's go to the next point. Well, this is what I want to show you all too. I was asked, and this is what I've been doing. I've been putting out all the trades in the Team Freedom signals every morning like this, all right? Right here. What I want to let you all know is these coordinates are based upon my broker, all right, and my account type, which is LMFX. Now, what you all need to know, your spread might be higher or it might be lower. I don't know. Okay, so for me, these are the spreads that I go by when my coordinates are entered, right? These are the spreads, okay? Now, what this could mean is you could be getting in too early or too late, right? Usually it's nothing major. It might be 1 to 3 pips difference, okay? Now, this is based upon LMFX, all right, guys? If anyone has interest to go into LMFX, it's going to be provided in the documentation I'm going to give you all right here, and you could go sign up for LMFX account, all right? And trade LMFX with us, so you know that everything that you're doing is based upon, is in line with what we are doing, all right? All right, let's move on to the next point. Is that spreadsheet available for other persons to calculate it? Everything that I'm showing is available for everyone within Team Freedom, Compounding to Wealth, or Focus Freedom. Okay? All right. But no one outside. Why? Because we put a lot of work into this stuff. And if we put a lot of work into it, well, you can't expect us to just give it away for free. All right? So next thing I want to go over is correlated pairs. All right, correlated pairs. What you all need to understand is that this is the way I think about it, guys. The market is just a big old cycle, all right? And everything is controlled by something else, all right? You have major pairs, and then you have crosses based upon those pairs. Agreed? All right, so let me show you all. Let's go. Right here. Okay, why can't I open that? 1 second. Share media. Okay. Okay, right here. Come on. Why can't I open this? 1 second, guys. If you're not sure what a cross is compared to a pair, IML Academy, all right? It's available for you right there. But essentially, this is what I wanted to talk about, all right? Something's messing up with my computer, guys. But essentially, this is what I want to talk about. There's something called correlated pairs, all right? And I'm gonna give you a, this is where this might not be visual at all because I can't open the picture, but everything I'm gonna talk about is just gonna be pure audio. Yeah, I can't get the picture. I don't know what's going on right now. Send me the picture if you can in the chat. This is what I want to talk about. This is how the market works, all right, guys? There's something called, all right, let me go to my calendar, there's something called the DXY. No one knows what this is. This guy, all of your wins and all of your losses is because of this guy right here, right? He is the US dollar currency index. Basically, he determines how strong the US dollar is or how weak it is, all right? When something happens in the news that weakens the dollar, well, this guy dies. When something happens in the news that strengthens the dollar, this guy shoots up, all right? Now, when he increases, right, he increases all US dollar pairs. Now, what does this mean? This means, all right, and let's just look at this part right here, right? This is non-farm payroll. So when the US, the DXY, the US dollar currency index, strengthen, well, what that's going to mean is that any pair like the gold, right, that has US dollar behind it is going to sell, right? It's all inverse because look, if the USD goes up, well then XAU has to come down. So if I click on XAU, I guarantee you it dropped. You see that? Now let's go to a pair that is prefixed with USD. Any US dollar prefix pair, like the USD CAD. I guarantee you this thing shut up. No, sorry. Right here. The reason USD CAD did not shoot up is because Canadian news came out at the same time. Right? And the Canadian was stronger than the weakening of the US dollar, so it still pushed it down. All right, but any pair that's really influenced by the USD shut up also. See that? Shut up also. Okay, guys. So what you all need to understand. What you all need to understand is the DXY and something called correlated pairs. All right. So this is what I know. When I monitor, right, what we call the DXY and futures, right? There's a Euro future and there's a JPY future. What those do, they control the strength of yen, the euro, and the US dollar, respectively, all right? So if the US dollar gets stronger, well, any prefix pairs, US dollar, which is US dollar dominated, are going to shoot up. any US dollar pairs that a US dollar suffix, like the Euro USD, right, is going to shoot down. All right, if I look at this guy, he probably shut down like that. Boom. What this means, guys, this means you basically have a 2-for-1 special and you don't even know it. See, I can analyze the DXY solely, right? Solely. I could just look at him, and based upon what he does, I know exactly what other pairs are going to do immediately, as long as there's no conflicting news. So when the DXY increases, I know sell Euro USD, sell gold, buy USD chef, without even looking at my charts. I just hit sell, sell, buy, and make profits in all. Right? These are correlated. Now you have negatively correlated and positively correlated, right? I mean, some pairs move together in one direction, and some pairs move inverse to each other, right? One will buy, one will sell. You'll need to understand this, all right? Just like the euro has a euro future, right? When the euro dies, when it weakens, all euro pairs are going to die with it. For this exact reason, look what happens, guys. The US dollar strengthened and the euro dollar weakened. Well, what do you think is going to happen to the Euro USD? All right? The Euro USD, before I even click this, the euro weakened and the USD strengthened. All right? So essentially, you have this. You have up and you have down. Come on, guys. All right? And what I'm going to draw right here, because this is very important. All right? You have the Euro USD, right? Euro USD, okay? Right here. And on the Euro USD, let's turn these around, right? The euro died, okay? And the USD strengthened. Well, what do you think is going to happen to that? When I go to the Euro USD, what do you think is going to happen to that pair? I want someone to just tell me real quick. Tell me real quick what you think is going to happen. Anybody? If the euro dies and the USD strengthens in terms of the euro future and the US and the DXY, it will shoot down exactly. Right? So if we go to the Euro USD, boom, it shut down. Y'all understand what I did there? I'm gonna go back one more time. This is super important if you don't understand what I just said. Look at the euro future. The euro died, it weakened, and on the DXY, it strengthened. Okay? So, what do you expect to happen to the Euro USD pair? Well, if this is selling and this is buying, the Euro USD has to sell, all right? It doesn't have a choice. He is going to sell. And if he is going to sell, the inversely correlated pair to him, which is USD chef, right? He has no option but to buy. All right, guys, this is simple 2-for-1 special. You ever heard the term knocking two birds out a tree with one stone? This is exactly that. All right. So what you'll need to understand is correlated pairs, inversely correlated, positively correlated. All right. And I'm gonna send out a few pictures with that, and you'll need to study that, all right? Because you could be getting 2-for-1 specials and you don't even know it. Okay. So it's this picture I'm trying to open, but I don't know why I can't open it. You know what? I'm gonna save this picture. Okay, save it to my desktop, and then I'm gonna go to my desktop real quick. I saved it right here. All right, boom, there we go. You'll see that? So if your USD strengthens and USD JPY strengthens, then Okay, so basically what this is showing you is pairs, major pairs, and their crosses. See, two pairs make up a cross, right? You have the Euro USD, which is a pair, and the USD JPY. If both of these are going up, then the Euro JPY will be going up. All right. So I'm gonna send out all this stuff. You're gonna understand, study this stuff. Very important. Okay. Let's move on to the next point. Okay. Next point. Understanding macroeconomics. All right. So the video that I did the other day on Thursday, based upon why did the GJ, why did it sell, right? It was based upon macroeconomics, guys. It was based upon what happened in the market, okay? So, well, you all need to know, you need to understand this. I learned this early on. The market cannot move without news. Cannot. There's nothing to fuel it. Okay, it will move so slow that you might as well be trading stocks. All right, this is why the Forex market, you can make a lot of money really quickly, because everything that happens around us on a daily basis fuels this market. All right, it basically gives it a jump start and pushes it down a hill, and then the market just bumps into little corners and bumps around via price action, right? So for you to understand how news affects peers, you need to understand macroeconomics, all right? And, you know, I'm gonna tell you all right now, 60 to 70% of my money is made off of news, strictly, right? Now, disclaimer, news trading is very risky, but trading Forex in the whole is risky. But you know what? You're already in it, so you might as well learn everything about it, okay? So what I've done, you know, what I've been doing for a couple of months now, I've created something called my macro trading journal, right? And this was only based upon the past 2 weeks. See, I record every set of news that comes out, okay? Everything that happens in news, I record it, right? And I trade it. You can see this is all the trades I've taken, making 135 pips there, 143 pips. But after a while, I started recording the entire moves because, you know, based upon my last video, I showed you all the concept of filling the wick via momentum, right? Well, a lot of these times, I could have made a lot more pips, but I came out a little too early, basically because I didn't trust my own analysis, all right? So I started recording the full movements of what really happened. Then I started to see the market moves over 1,000 pips, you know, almost 1,000, sometimes almost 2,000 pips, so 1,700, all right? So what you want to do, don't just look at news and be like, wow, that was a really crazy day when the market was chaos. No, go back and watch what the news did to all of the pairs, all right? Imagine this. Imagine you traded all the pound pairs, right, either prefix or suffix, on last Thursday, okay? And you just traded them with a 0.01 lot, 10 cents, okay? And you caught all the right directions. Well, you would have made, what is that? It's $162, right? I think if my math is correct. Let's see, 0.01 times 1,600. Oh, $16. Okay, maybe $16. But let's say you traded it with no. That would be whatever it is. You call it 1,600 pips, right? With $1, that's $1,600, 10 cents. Yeah, it's $162. Good. I don't know why my calculator. I'm believing me. All right. So you need to record news, understand what happened, write your spreads down, right? Because I didn't trade this pair for a specific reason. It moved the most, but that spread is crazy, guys. My emotions right now, I'm only human. It cannot handle seeing negative, whatever my lot size is, times this spread, all right? I'm just not about it, all right? One day we traded NZD news right here. Whew, it moved. I think this is where I stopped recording at 700. I think it moved a total of 1,000 pips. But look at these spreads, guys. They're insane, right? I came to the conclusion the only ones I liked were these two. They moved the least, but it was cheaper to get into them, so essentially I could have used a bigger lot size according to my risk management, all right? So essentially this is what you want to do. When you trade news, or not even trade, when you see news happens, you want to record it. Put the date, put what was the type of news, how many high, mediums, or lows, put a conclusion of what happened, right? Then you want to put down all the pairs, put how much pips they all moved, put the spreads for which ones you liked, calculate the number of pips, and write some notes. For this reason, when this news comes back up again, all right, let me zoom in some more, all right? When all these come back again, what do you think is going to happen? I have my notes. I know, hey, this moved the market almost 800 pips last time. I'm looking out for it again, right? Based upon my notes, I know what mistakes not to make in the future, all right? Because news is going to happen regardless of whether you like it or not. And either two things, you could stay away from it, which is good, or you could attempt to learn how to work with macroeconomics. Because what do you think these IML educators do? They all trade news. What did they tell you that they don't? Trust me, they trade news, all right? So if whatever you could record, you could improve upon, all right? So anything that deals with essentially inflating or deflating a currency, right? Like interest rates, et cetera, CPI, GDP, all this stuff, non-farm payroll, right? All this stuff, right? You can learn to trade them, all right? And learn how to profit upon them, okay? So please understand macroeconomics and how it affects the market, all right? Don't be afraid to read up on stuff, because if you can read up on it and understand it, you can improve upon it, all right? All right. So that's basically macroeconomics in a view. All right, indicators. We're almost done. Indicators, guys. A lot of you are indicator driven, and indicators are good, but I'm gonna go back to price action again. If all the indicators were to die tomorrow, what will you do? I mean, I'm not saying don't use them, because I use them, but I'm saying don't be overly dependent upon them, all right? If you do not even know the basics of trading, which is why you're on this call, okay? So I am not an indicator expert, but I use a few, right, as confirmation checkpoints. That's all an indicator should be for you, right, is to give you confirmations on a trade, right? But overall, you should understand where price action is going to take this pair, right, before you use the indicators as a confirmation checkpoint. So, for example, we use the EMAs a lot, right? That's the #1 indicator I use. And reason being, I put this in my last video, but they basically give me, in simple terms, they tell me how strong support and resistance is, and they tell me basically how strong the momentum behind a movement is, all right? So for all my trades that I make, I'll only look at the 2-hour chart, right? 2-hour chart for me is a sweet spot. So if we look at the, I already went through pound JPY, let me go over pound USD, all right? If we look at the pound USD, let me remove my fib. See where the EMAs crossed? That is exactly where it started to sell, all right? You see how strong this gap is right here? I mean, price essentially has to fight through this gap in order to convince me that he wants to buy, right? Because once upon a time, he did go through here, but then look what happened. He pulled back. He attempted to go through again. He pulled back, right? So he's slowly making his way up, but essentially it's telling me he has a strong resistance he needs to get through. And when he gets through it, he's just going to encounter my 1-hour ceiling, all right? So EMAs, that is what I use them for. In the past, we used stuff like, you go to indicators, and you could do Let me see. We used, some people use Bollinger Bands. Those are nice, but we used directional movements, all right? And what the directional movement is based upon is the ADX, right? And what the ADX basically is a strength indicator, and it could tell you how strong the number of buyers and sellers in the market are. All right, so let me quickly show you all how to use this one, but I won't go beyond this because if you want to learn about indicators, IML Academy. You go in here and you learn about Bollinger Band and Elliott moving averages and stuff like that, right? I'm not an indicator expert. I don't claim to be. I'm just telling you what I know. So what the ADX shows you here is a strength, right? Red is sellers, blue is buyers. When the ADX is high, that means there's a lot of strong movement in the market. And whoever is on top controls the movement. So here, the sellers shut up, the strength is up, so it's sold. See, sellers went up and they're strong, boom. Okay, let's look in the past for a buy. Buyer shut up, ADX rose with it, buyer shut up. See, simple. All right, I won't go further than that, but at the end of the day, everyone needs to understand price action before you could understand indicators, all right? Let's say we use the EMAs. Our levels for EMAs are 8 and 18. One is just a little faster moving average. The 18 is a slower, smoother moving average. But anytime they cross, all you have to know is that price is going to explode to whatever direction the EMAs are moving. If they cross to the downside, it's going to explode down. If they cross to the upside, it's going to go up. All right, like right here, boom, shut up, all right? And with news, EMA is a good indicator because if it's already moving down, all right, the EMAs are going to show you where it could potentially go as a confirmation. Okay. Let's see. 8 and 18. 8 and 18. All right. All right. Last point before I send you on your way. Avoiding greed. All right. Guys, I'm not even perfect. We all get greedy. All right. I don't claim to be. But the number one way to avoid greed, which I've realized, is back to point number one, risk management, right? And risk management basically involved and revolved around your daily growth, right? If you made your percentage for the day, as hard as it will be seem, and I guarantee guys, it's going to be very hard. Get out the market, all right? If you see, if you're in profits and the profits are 50% of whatever your account balance is, or 10% of your account balance, grab it and done. Just do that, all right? Avoiding greed, one way is to stay out of the hype, That's why I don't read a lot of the group chats a lot of times of the day because there's a lot of hype in them, and I tend to try to stay to myself when I'm trading because hype can get you greedy, right? Someone saying, bro, I'm making a lot of money. I'm making a lot of money. And then you jump in, and the minute you jumped in, it retraced. And then you got scared when it was just doing a little simple pullback. You got scared and you pulled out. Well, you just threw away your money. All right. If you already made, I don't know, you made 100% for the week. All right. And your goal was only to make 20% a day. Well, then you don't need to trade. And this was by the 4th day. So you made 100% within 4 days. Okay. Well, then you don't need to trade the 5th day. Take a day off. Just look at the market. You don't need to trade every single day. All right. Look for setups and let the opportunities come to you. Don't run down opportunities. All right. So let's see. What we did was we went through these 10 points today. What I want to let y'all know, the first and the last are the most important. And you see, these two guys could be the, either one or two things. You're going to practice good risk management and not be greedy, and you have a long, sustainable career in trading, or you're going to not practice good risk management and be greedy, and you're going to make a lot of money some days, but I guarantee you, I'm not calling it on you, and I don't wish this for you, but you're going to blow your account. All right? It's not if or but or maybe. It's just a matter of when are you going to blow it. All right? So we went over these points. Charting, I showed y'all. We might do a separate session on that because that's very important. Always look at the economic calendar before you trade. Keep educating yourself. There's no reason why you're paying 145 US every month or 185 US, whatever your package is, if you're not going to go through the whole academy and you're not going to tune into all the IML TV sessions. Remember, if you're not doing once a day, you are not really trading. I don't know what you're doing. London Daybreak is our consistent money maker. Understand how to do the London Daybreak, and I'm going to send out the Word document on everything. Spreads. Spreads are super important, right? Remember, all the London Daybreak keys that we send out are based upon LMFX. So if you're interested in LMFX as your broker, message me and I'll show you how to get started. All right, that's the broker. Correlated pairs, so important. I can't even stress on how important this is. This is your 2-for-1 special right here. Right? You understand correlated pairs, you're good to go. This is why when you see one Japanese yen selling, trust me, they're all selling. You don't even have to think about it. Just hit sell. All right. Or if one is buying, just hit buy. All right. As long as it's controlled by the yen strength, not by the other prefixed in currency. All right. Because yen only suffix pairs. All right. So if something happened to the yen news and the yens die in value, well, then all yen pairs are going to just shoot up regardless. All right. Understand macroeconomics and record it to be better at it. Indicators, pick 1 or 2 and really study them and then elaborate later on. And as I said, don't be greedy. All right, guys? If there's any questions, what I'm going to do really quickly is let me see. I'm going to stop recording here and I'm going to let everyone ask questions, okay?